beginning. Welcome to the TraderMerlin show, everybody. Sorry for that weird little delay. I had my microphone muted. I got it fixed now. I can see you guys. You guys did get to hear Bill drop the S-bomb. That was great. It's okay. We're not censored or anything. Today's show is going to be a little bit different. It's about colossal ineptitude and what our government is not doing, right? And I was kind of making the joke before when I was rambling on for you guys earlier on. I was saying, look, if I was taking a full-time job and literally not getting my job done, what I was hired to do, I would be fired right away. That's what's called free market. That's what's called capitalism. Unfortunately, we have a political system where I can just sit there and bicker and say, no, Bill, I don't like you, and I'm not going to agree with you no matter what you say because you're the opposite side of the aisle, so screw you. And then I get nothing done. We've got no stimulus. We've got no budget. We've got a bunch of politicians who are getting six-figure plus salaries and getting rich for doing jack shit. So today we're talking about what is not happening in Washington. Of course, this has a big implications for the interest rate markets, as we'll talk about. And of course, now that you guys have seen his face, here's the great and talented Bill Addiss. Welcome back, Bill.
Who has a face for radio. Thank you, Merlin. Great to be back. Good to talk to you again. How have you been?
Good. I'm great. Good to be heard. And as you guys might have missed earlier, I was giving Bill some accolades for spurring my interest in the bond market and interest rate products because I started off as equities. Moved to futures, moved to Forex, moved to options, and never really cared for the bond market. But nowadays, you kind of have to know how the bond market's moving because it is, in many cases, the dog that wags the tail. So start me off there. You were talking about the, you didn't call it the quickening. What did you call it? Like with the inflating or something. You had a special term that you were using.
Relative to what? I'm sorry.
To bonds and interest rates. You were talking about how like it's going to rise up on that longer term yield.
Oh, yeah. No, what my conviction, and thank you for the opportunity, is as we've been educating the OTA community on the impact of interest rates to so many other asset categories. What I've enjoyed with OTA is I spend days now, months, years talking to people who might never trade a bond, but they understand the interrelationship between interest rates and equities or interest rates and currency, interest rates and commodities. I'm a bond guy. I make no bones about it. As far as I'm concerned, the whole world revolves around interest rates.
Yeah.
So, and I do believe that. You said it's the tail that wags the dog, and I literally do believe that. But I think we're coming into a phenomenon now here that warrants some attention because, Washington, you said it, Washington has not done their job. And I'm broadcasting from D.C. I live here in the swamp. And it's just discouraging because we ended the fiscal year on September 30th. Did you miss that? Happy anniversary, happy birthday.
Yeah.
We ended the fiscal year on September 30th with a $3.3 trillion deficit. That's the largest deficit in history, surpasses the $1.4 trillion back in 2010. But what that means is the government is now going to have to borrow $3.3 trillion more than they had it prior because we have to fund that deficit. These are bills that have to be paid. So the government is now starting to do unprecedented size auctions because of all this debt we have to finance. Mm-hmm. So last year on the 10-year, the 20-year, and the 30-year auctions, they were record size. This last week's 3-year auction was record size. So I know I'm speed talking. I'm sorry.
No, we love it. Speed talk
all
away.
Right.
You got to keep up with me. I'm the one who everyone thinks I'm on drugs or something. I talk so quick.
All right, yeah, too much caffeine. So all right, one last point, and then I'll take a breath. But the OTA community can relate to this because it all comes down to supply and demand. Mm-hmm. We got a boatload of supply of treasuries coming into the market. And Mnuchin has told us they're going to finance us with long-term debt. So we got a boatload of long-term debt that's starting to come into the market. And it's like any other product, right? If you got a lot of supply coming into the market, prices go down. Mm-hmm. And as we all know, if prices go down, yields go up. So I think just based on the fundamentals of supply and demand, we're looking at what we call a steepening yield curve.
The steepening, that's the word you was looking
that's
for.
That's the word. It took me a while to get there for you. I'm sorry.
It's okay. I'm a little slow today.
No. But what that refers to is the Fed. They have been incredibly transparent, unparalleled transparency. They're telling us they're leaving short-term rates unchanged for the foreseeable future.
Right.
We've never had them telegraph that to us. So they're showing us their hand. Short rates are going to remain at zero. Mm-hmm. Long-term rates, though, are subject to this supply and demand consideration. So all of this supply coming into the market should lead to this non-parallel shift to interest rates, meaning short-term rates stay the same, long-term interest rates rise. And there are certain sectors of the economy that will really like that, particularly the banking industry.
For sure. Yeah. Banking definitely loves it. Housing, not so much, but we've seen Great housing numbers recently. Existing home sales, pending home sales, new home construction. I mean, I made the argument that GDP, about 15 to 18% of GDP is real estate related and housing market related. Well, that's the one bright, shining spot of the economy is housing. And if that's kind of doing so well and we're still at a negative 31% GDP, we have some other sectors that are doing pretty darn ugly. Let me show you guys this chart that Bill sent to me. This shows you the federal surplus or deficit as it is at this point. And just to put it into perspective, you can see how dramatically it's fallen, right? It's just literally fallen off a cliff. I mean, it's still screaming to the south side. But what's noteworthy here isn't just the free fall, it's its scale. It goes all the way back into, this is 1900. This is 120 years of federal deficit and budget and surplus. And nothing even comes close to it. I mean, you look at the deficit we had in the 20s, right? Great, in the 40s and 50s, 60s, 80s. Nothing comes close to this. I mean, we were at 400 billion deficit until like 2005 or 6. Then all of a sudden, 2010, we dropped to about 1.5 trillion. And then it looked like we were doing good. It's like, okay, we're doing what we're supposed to do. We're paying down that deficit, right? And all of a sudden, it's in a free fall right now. And I think this is the scary part because we look at the economic data at this current moment in time and it actually doesn't look so bad, right? It's starting to look a little bit better, but this is one of the main reasons why it's looking better. And how long can a government do this? I mean, we are absolutely in uncharted waters, Bill. What's your hypothesis? Because you've been in this bond market area much longer than I have, and I know you've never seen anything like this. Nobody has, but what's your hypothesis on this going forward?
I have to say, I'm a traditional Keynesian type of guy. I'm economics 101. And I think that the reason the market is looking so well and we're kind of hiding so many sins is not just the increased spending by the government, which we just testified to, but it's also what we continue to talk about with the Fed, the fact that they pumped $3 trillion in the last 6 months as well. I keep coming back to, though, I do worry about inflation. And I know I'm going to sound like a stagnant, an old phonograph here, just keep repeating and repeating. But the amount of liquidity that's just being dumped into our economy by both the government and the Fed, at some point we have to assume this is going to start having some traction. And when that happens, and even for all my pessimism, that will happen, I worry that inflation is going to be a problem. And, how aggressive will the Fed be about pulling all this cash out of the market? The problem is we've also got two concurrent things going on. The Fed's willing to do what they need to, but yet the government isn't. You started the session by saying, nothing's coming out of Washington. And I just need to reiterate that because we don't have a budget.
Yeah.
Congress's minimal job is to give us a budget every year. And, it's not like it comes as a surprise that September 30th we were going to expire. So on October 1st, we didn't have a budget. Congress didn't do their job. Exactly as you said, what are we paying them for? So without a budget, they did their typical, waited till the last minute, and then passed a continuing resolution that's going to expire on December 11th. So we got a ticking clock here.
Yeah, and it's been ticking. I mean, it keeps on ticking. And the sad part is, I'm a taxpayer. I want to see something done about it, and we haven't really seen anything, no resolution here. We elect these officials for a specific reason, right? It's not just because, some of you may be aligned with your political party, and there's nothing wrong with that. But I don't really align myself with a political party. I align myself with who I think is going to do the best job for our country. And by the way, I'm no way grandstanding on a political party here, but I would encourage all of you to get out there and vote. I know I sound like a broken record. If you don't go out and vote because, my vote doesn't count, or I don't care, our system's broken, you're an ass. Right? People died for our rights to go out and vote. So go out and vote. I don't care which party you vote for. Make a change. Make your voice heard. Because if you're complaining about this crap down the road, I don't want to hear it if you did not vote. So anyway, sorry, I won't grandstand anymore. But get out there and vote, please. Encourage your kids, family, friends. Probably the most important election of our lifetime. Let's make sure we all get out there and do our part because I know people died for my right to vote, and I'm not going to squander it. Now, as far as the numbers there, I wanted to go and bring this picture up because we were looking at some numbers, and I modified this very briefly. Let me see if I can bring this up for you.
Well, while you're doing that, if I could point out on that slide, what impressed me was we got through both World War I and World War II without really any appreciable impact to a deficit. We funded the wars.
Yeah.
That's pretty amazing.
Yep. There we go. I'll bring that chart back up. It is pretty amazing. I also, since we talked about the inflation rate. Just to put it into perspective, I agree with you 100%. I think at some point this is going to rear its ugly head. And the reason I think that is that's what I was taught. So I'm going to be very, very careful here. I was taught through my finance degree and economics degree that when you print this much money, you have more money in circulation, more money chasing the same amount of goods and services creates an inflationary environment. I have not seen that in any way, shape, or form, at least for the metrics that they're counting. So let me show you a chart here, guys. This is U.S. inflation rate from 1990 to 2020. Just to put it in perspective, we're still relatively low. It shows for 2019, 1.8%. It's actually dropping. I would expect this to be moving way up here, but it's not. So while I agree with you 100% because that's what we have been taught, there's a little voice in my head that says, maybe I was taught incorrectly. Something might fundamentally be wrong here because I haven't seen it happen at all, and our money supply has gone absolutely parabolic.
Yeah, I mean, if you look at M1 and the amount of cash in our economy, it is parabolic. You're exactly right. And that, though, continues to scare me. And maybe like yourself, I'm a function of my education and my experience. But I came into the market in 1979 when we had a stagnant economy and yet hyperinflation. Mm-hmm. That is the fear I have going forward. That's not that it keeps me up at night, but somebody says, what keeps you up at night? That's close. And stagflation is the worst of both worlds. Yeah. And this is not a theoretical discussion. That's what Paul Volcker had to deal with and did so successfully in 1979.
You know, when we look at the stagflation environment that you made it through in one piece, I might have left a little couple chunks back there, but what sort of actions need to happen? All right, so right now we're in an environment where bottom line is our politicians, and I don't care whether you're Democrat, Republican, Libertarian, Green Party, or Kanye West Party, doesn't make a difference to me. You know, you're all going to point the finger at the other person and say, well, you suck because you're not letting me get my job done. Anybody could say that in political office. If they were to get their jobs done and we had a market like this, I mean, do you think that the policies that are in place right now are the right ones? I know it's a touchy subject, but especially to help steer this market back to normality?
I have to confess, I have a certain pessimism there because I think what you're proposing, no offense intended, is just completely unrealistic in today's world. Mm-hmm. I think I would love to see it. I think it would be a panacea, but let's look at the fundamental budget that we started with. 3.3 trillion. Now, most people, and there's the MMT theory, which says maybe you don't have to worry about that. I don't think too many people are convinced of that yet. Some people call that the millennial theory of economics. I don't have to worry about it. I don't subscribe to that. So that being said, though, you've got 3.3 trillion that has to be brought to market, and the real issue is we have to address the deficit. Now, and again, I don't want to be partisan here in any way, shape, or form, but we all know with our household budgets, you take care of a deficit by cutting expenses and increasing income. Not one or the other. It's a compromise of both. But I don't hear those discussions going on. I mean, I really do believe, forgive me, that the political system is a bit broken right now. Mm-hmm. The word compromise is actually a negative in today's environment.
I agree. It's a strange one, that's for sure. You guys, just so we can see an example of what he's talking about, here is the yield curve right now, and this has changed recently. Let me go back to, let's say, 2019. As you can see right now, it's July 2000. I'll do from January 2019. On the left, you have the yield curve itself. On the right is what the market performance. And I'm going to just slowly kind of go forward here. And you'll notice the chart on the left, the little red line represents the different maturities and the yields at that maturity. So you have a 3-month, a 2-year, you can see at the bottom, 5-year, 7, 10, 20, and a 30-year. And as I move forward, the left side just gets ripped down aggressively, especially once COVID hit. All of a sudden, boom, it just snaps to the bottom suddenly. But what's interesting is the right side of that line chart dropped quickly as well. And to Bill's point, he's been talking about this for months now. He thought that the longer-term side of this was going to start to spike up, and look what's been happening. I mean, it's certainly rising. It's not above that 2.32% line there, but it's starting to rise. And as we have these auctions come to market, you might have heard Bill say earlier that it's some of the biggest auctions they've ever had because they need to sell more of these treasuries and bonds to bring in capital to pay that deficit. Now, in doing so, pushes the price down, and of course, in order to make it attractive, you have to offer a higher yield, and that's what's been happening. So, expect to see this normal curve is what they'll call that to steepen a little bit. Which that was the word I was looking for, the steepener curve.
Yep, that's it. Flatteners and steepeners. That's what we're all about.
Yeah. Nahum says a one-party system like China. No, you know what I would like to see, and someone sent me this in to me, and I would love to see it if you are on the presidential ballot in all 50 states in the U.S., then you deserve to go to the presidential debates. Unfortunately, we have a two-party system where basically nobody else has a voice. So, you'll have a Libertarian Party, you'll have a Greenpeace Party, you'll have whoever party. They're on all 50 states, but they don't get to debate. To me, it's unfortunate. I wish that there was a more even... I think Italy's got like a dozen different parties. So, it's too polarized for me. I'd love to see a 5-6 type of party system where we really got the best representation. And I'll be honest, out of 330 plus million people, these are the two best people we have to lead our country. I got to shake my head, guys. I just cannot believe that this is what we have to choose from. But I'm still going to go out there and vote. Actually, my ballot's being filled out right now as we speak. Okay, let me ask real quick. There's a question that came in from a viewer. I want to make sure I get to this one before. I know we got to keep on time here because you got another engagement here right after this. It is from Kingsley. Kingsley says, what's your take on convertible bonds for retirement growth? I don't myself trade or invest in convertible bonds, but maybe tell us a little bit what they are, how they might be suited for one's portfolio, and then your take.
No, that's a great question you got from a listener. Thank you. Yeah, the convert market, convertible bonds, is a kind of a unique product. All right, it's a bond. It's called a hybrid because it's both part bond and also part equity. Because what happens is they issue a bond that pays you a certain coupon, but at some point in the life of the bond, you also have the opportunity to convert it into a predetermined number of shares of the company's stock. So if you think about that, you're getting both growth and income with one investment. And I'll bet you if any of your listeners have a balanced mutual fund or a growth and income fund, they actually own converts because that's the biggest buyer of these. Because in the old days, when we would construct a balanced or a growth and income fund, we'd buy some stocks and then we'd have to pay a separate commission to buy some bonds to put into the portfolio to give you both growth and income. But a convertible bond gives you both growth and income with one trade. Mm-hmm. So you're getting the income from the bond piece, but then the upside of the stock. And the other opportunity for this is, let's say the stock doesn't do well, right? And you don't want to convert it into stock because you'd actually lose money from the original $1,000 investment you made. Well, then you simply say, well, I don't want the stock. Just give me my $1,000 back like every other bond when it matures. Mm-hmm. So if you think about it, that's kind of a safety net that you don't have when you buy stocks. You basically have a floor. That says, you'll never get less than your $1,000 back, assuming the company's still in business. I mean, there is a credit risk here.
There is that.
So you get growth and income in one investment. That's why mutual funds love convertible bonds. Yeah,
and I think the best part there is that it gives the owner of it the choice, the option. So you have a little more flexibility with what you can and cannot do with that one. So, so good. There you go. If you want them, go use them, but I think you got to be careful because they're not all going to be the same. It's a little more complicated. There are certain conditions, and you got to understand all the ins and outs of them. So make sure before you buy anything, just like you trading futures or something, that you know the rules for each one of the instruments you're getting yourself into.
And they are very specific. Everyone is different, exactly as you said. In some cases, you can convert it to stock only at expiration. At others, you could convert it over the life. I mean, there are bells and whistles to it. It does require a little more, homework and education.
Yeah. Bill, let's talk about the rising interest rate environment, since that's the situation that we find ourselves in right now. As a bond guy, how do you look to capitalize on the rising interest rate environments? Are you looking? I mean, would tips be the way to go, or I'm curious how you would play it.
No, great question. And that's the strategic shift, because in a declining interest rate environment, which we've obviously been in now for the last 7 years, you want fixed rate product, right? You want those bonds that will hold on to their income and their value. But now that our peers going into, or I feel we're going into a rising interest rate environment, then you want to look at floating rate product. Bonds where the coupons will reset and that rising interest rate environment actually becomes a positive. Mm-hmm. Right? It's because you keep capturing the new and higher interest rate. So I really like floating rate bonds in a rising interest rate environment. The problem is here in the U.S., we don't have a lot of them.
Yeah.
Europe has a boatload of them. Most bonds in Europe are float, but then you'd have currency risk. So that's a whole separate discussion. The floating rate market here in the U.S. that's the biggest, as you just mentioned it, is the TIPS.
Mm-hmm.
The government floating rate, and they float relative to the CPI rate, the inflation rate. So, with my fear of inflation starting to rear its ugly head, I think it is time to start looking at things like TIPS and floating rate bonds.
It's another good question came in from the viewers here, which was, where can you buy these at a typical Charles Schwab type thing, or do you have to go through a special location? Because it sounds like they're a little bit more limited than.
Well, I'm going to go one step further. You can do it through a broker, and they will charge you a fee to do it, and you would buy them at the new issue auction. But as you know, I'm a fan of a service called treasurydirect.gov.
Yep.
Which gives the investor, the retail investor, the opportunity to buy treasuries at the auction from the government for free. And there's a whole schedule of when the next TIPS auctions are on there. So you can buy them at different maturities. The government offers 2-year, 5-year, 7, 10, and 30-year TIPS. And there's a schedule as to when they're sold. So using this treasurydirect.gov, you can buy TIPS for free. You're getting the same level and yield as the institutional market. The government is acting as your custodian, so they'll do the safekeeping for you. And you can also buy them in $100 denominations. When you buy them through your broker, you can only buy them in $1,000 denominations. If you buy them through Treasury Direct, you can buy them in smaller pieces. All those features I like.
Yeah, I have the page up here, guys. So it's treasurydirect.gov. If you notice where I went, I just clicked on individual, and you'll see on the left-hand side there's a whole bunch of different choices here. And I've clicked on TIPS. Which are Treasury inflation-protected securities, which, as Bill says, will adjust. So as rates start to rise to the upside, you want it to readjust. You want to get locked in at a higher rate. We talked about this last year. I think it was early 2019. We talked about the falling interest rate environment. That's when you don't want TIPS, right? So again, you have to kind of market time here your instruments. As he pointed out, it's a $100 minimum purchase. For those of you who want to know, your maximum is $5 million. So I'm sure some of you guys will be priced out of the market there. Yeah.
We'll have to do the next auction again.
Right.
I would say, though, and if I could, because the TIPS are slightly more complicated than we're making them sound. So I would encourage people to do a little homework, because on a floating rate bond, normally what floats is the coupon. And what TIPS, what actually floats is the par value of the bond. So we don't really have time to get into it now, but it does float. Don't get me wrong. You still enjoy the benefits, but mechanically it's a bit more cumbersome. So I would encourage people to do a little bit of homework there.
There we go. GD says, have you ever, let me get this over here. GD says, have you ever heard about the bond that will never expire into perpetuity? Just the interest is paid. That is reportedly what governments will get into. The money will never be paid off.
Yeah, and actually I've just recently been introduced to some of the casinos are actually starting to do that with some state financing. So relative to casino financing, it's my understanding, and again, I'm not a bond counsel. As I understand it, though, corporations and the government would have trouble issuing perpetual securities because of the interest rate component. Now, again, I'm not a tax guy, but I don't see perpetuals coming into the market unless we get a tax change, because corporations get a deduction when they pay interest on a bond. If the security is perpetual, they don't get that deduction. So I don't think they're going to be inclined to do that. But it is subject to discussion. I mean, it's something we are starting to see a little bit. But casinos and the Indian reservations are actually starting to do that, I understand.
Huh. News to me. I know. I'm not up on my Indian casinos. It's bad enough that Vegas is dead to me right now, you know?
That's right. So are the Indian casinos to me, I assure you. So I look forward to them opening.
It's a bummer. Bill, as we got a couple minutes left here, talk to me about your signature series. I know you do a couple of events which are, like an introduction to what you cover, but I wanted to let our viewers know, because I know we have a lot of people who are fans of your work and your experience. So tell me a little bit about the signature series and where do they get more info?
Yeah, this was something we rolled out this year. And, I've been providing education to OTA through OTA Academy and working with you in the videos and newsletters for about 3 years. And we made the decision at the end of this year to roll out a 3-day series called Bond Aid. And it's part of the Signature Series program. So it's 3 days dedicated to understanding the bond market. And again, it's kind of a multi-level approach, because as I indicated earlier, my bias is that I don't care what asset category you're trading. You need to understand about interest rates, the Fed, the economy, because they kind of affect everything. So we spend a lot of time getting into the macroeconomics. Let's discuss the Fed. Let's get into the balance sheet. Let's understand quantitative easing because it's such a factor and it's unprecedented. And then we also then spend 2 days getting into various product trainings, corporates, convertibles, municipal bonds, and then intersplice in there is strategies. How to actively trade the market using ETFs if you want, how to do passive investing and construct a ladder. So it's kind of 3 days soup to nuts of bonds 101. And it's a new asset category for the OTA community. So we've gotten real good response. So in anticipation of those, what we also offer, and people should look at the calendar, is what's called the Companion Series. And for 5 weeks leading up to the class, we offer an hour to hour and a half every week, kind of picking snippets of the class and provide some insights as to what we talk about. So I would encourage people, even if you don't want to go to the Signature Series, look at the schedule for the companions for the Bond Aid, and you can sign up and do an hour and a half, and we talk about different aspects of the bond market every week. It's been a lot of fun. I've been very impressed with the OTA community.
Oh, absolutely. I mean, there's so many bright people out there, and they're always hungry for information, which is why I'm actually really happy. If you go back 3 years, there really wasn't much that we did with anything with bonds. So I'm very happy that not only are we teaching something to do with bonds, but that you're the one who's doing it. So
thank you, and you've been a big proponent, and I thank you for that, Merlin. It's been a pleasure working on it with you and the marketing that you do. So thank you.
I'm trying. Richard says, Bill, do you think that cryptocurrencies will begin to be offered from the Fed?
The Fed is going to get into cryptocurrency, yes. They've already indicated that they're looking at doing settlements with the banks using cryptocurrency. Now, that's not to say it's Bitcoin. That's a different discussion.
Yeah.
But I think the Fed, and there's also another endeavor, the DTCC, the institution that does all our clearance and settlements. DTCC is also working on a separate initiative for cryptocurrency for security settlement. So, cryptocurrency is, and we have to, our volumes are so big. We have to settle trades and have more efficiency in moving money around. So SWIFT is just old and outdated. So, cryptocurrency is the answer, but that's not to say it's necessarily Bitcoin.
I've got to give a shout out to Ken G, who's one of our viewers. If you guys check this out, he sent me this one. This is Bill 3571. It was actually snuck through in the previous Stimulus Act, which basically it's called the Banking for All Act. And if you notice right at the very top, the first 5 points are digital dollars, digital dollar wallets, member banks, and pass-through digital dollar wallets. So without a doubt, the Fed is getting into it, but Bill pointed it and hit it perfectly. It will not be Bitcoin. The question is, does this become competition for Bitcoin? I think it actually bolsters the case for Bitcoin because people will go, wait a minute, I don't want the centralized bank in it again. I want decentralized. And that's part of the reason we're seeing, I think, more such a huge rise in Bitcoin over the last 48 hours. All right, I've got to cut Bill loose. He's got something to do here real quick. So, Bill, thank you so much for joining us. I do appreciate it, and I look forward to being involved with your next piece on bonds.
Good. We're going to get you out there for one of those companion series, Merlin. Thanks so much for all your help and support.
No problem.
Pleasure
Take care,
working with you guys. Have a good one, folks. Safe travels.
Bye.
Peace out.
Guys, that was Bill Addiss giving us some insights into what the heck the government is not doing, and it's kind of frustrating. I'm sure many of you feel the same frustration as I do. I would love to see things get pushed along and things get done. We can always point the finger at somebody else across the aisle and say, well, it's the Democrats' fault, it's the Republicans' fault. Bottom line is, it's both of their faults. If you're really looking at the best interest of America, there would be some agreement on things and we would move some projects forward. Instead, it's not happening. What is happening, though, is that colossal amount of deficit, which I thought was a great chart that Bill shared with me today. Of course, this is from the Fed. Let me see if I can bring that back up for you guys because it is just a very compelling chart. This one right here. It just makes me think, what's the next reading going to be? As this monthly number rolls out from the Fed, and this is from the St. Louis Fed, you can pull the numbers up there on their website. We'll probably see this continue to fall down. There's no talk about any sort of easing with regards to spending, right? Right now we're all frustrated because they're not doing any more spending. So, this will probably continue to drop, and it reminds me of those old, I forget the name, the Looney Tunes, right? Where the coyote's tongue falls out of his mouth and slaps all the way to the floor, and then it just keeps rolling down the street. I mean, that's pretty much what this chart looks like. It's a kind of crazy free fall off the cliff here, and it's probably going to get worse. And again, as Bill points out, in order to fund that, in order to pay for all of this, they're going to have to issue more bonds. More bonds out there mean that yield curve that I just had up there as well will continue to rise. So expect to see this get steeper on the hard left side or hard right side of this chart here, whereas these 30-year yields, 20-year yields are going to start to rise up as those bond auctions come to market. So it's good because we had that inverted yield curve in August, right? August of last year, so it's been a little over a year since that inverted yield curve, which normally that means we have a recession about 18 months after that, a year to 18 months after. So we still aren't, we got 6 months to go before we're, let's say, out of the statistical normality for a recession based off an inverted yield curve. Right now, things looking normal, but it is kind of a scary situation. Let's see. I will go to a couple lists of questions here. Jerry says, Merlin, sorry to brush feathers with you, but don't you think the feds will outlaw Bitcoin? I am skeptical. You know, it's one of those things where think prohibition. What happened during prohibition? Did alcohol stop, or did it almost force people to go find other ways to get it? And what are they going to do? Would the government be able to say, we are going to give you prison sentences or a fine if you own Bitcoin? If you do it properly, you can move anything anywhere you want. And I do have my private keys, and let's say I've got on one piece of paper, I have a Bitcoin, and I have several pieces of paper, so each one is going to have one coin. I could make the argument that I lost the paper. So they would go, well, we know that you bought one because you talked about it in your taxes, so you can't have that anymore. I lost it. It's gone. Okay, well, what are they going to do? They can't argue with me. They could go and try to find the Bitcoin number, but I lost the piece of paper, so I couldn't even tell you what address it's at. It's gone. So that brings up something very interesting with that crypto space is obviously we don't want to be liars, but you could very easily just say you lost your paper, you lost your private key or public key, and that cryptocurrency is now absolutely gone. The Fed could try to ban it, but in order to ban Bitcoin, you would have to shut down every server in the world. Every computer down to the very last one, which will never happen. Even with a global power outage, it would just come right back up. So you can't stop it. That's, again, where I was pointing out at the decentralized aspects to this. The Fed, if we have a digital currency with the Fed, and let's fast forward 5 or 10 years. Obviously, the Fed is there to represent the banks. But what happens if all of a sudden the Fed itself becomes the bank, right? We don't need a Wells Fargo. We don't need a JP Morgan. We all have account directly at the Fed. And maybe our Wells Fargo account is just an intermediary, but it's all a digital ledger. It's all digital currency, which in that bill I just showed you, which is 3571, I think. I'll bring that back up. It specifically says, let me see if I can bring that page back up for you. 3571 is that bill in front of the 116th Congress. It specifically says right here, number one, digital dollars. The term digital dollars means dollar balances consisting of digital ledger entries recorded as liabilities in the accounts of any Federal Reserve bank. So that basically tells you who is the intermediary, who controls everything. And here's why this is so scary. If all of a sudden the Fed goes, hey, you know what, Naum, we saw your Facebook post, it was overly political, we think that you're a domestic terrorist now, instantly all your accounts are frozen. Nothing you can do about it. The Fed can turn on and turn off in a matter of seconds. To me, that's scary. That's too much centralized power. All my money could just be frozen like that. That would, for me, further facilitate the excitement about a digital decentralized currency. Now, I could probably, depending on the way these systems are going, and Brendan's not here today, but unfortunately, there are some technologies out there where I can take Bitcoin and I can run it through a software and it instantly converts to another cryptocurrency. What's to stop me from taking my digital Fed dollars, running it through the software the same way, and saying I want Monero or Litecoin or Ethereum or Bitcoin or different cryptocurrencies? So, Jerry, I understand why you're thinking the Feds may outlaw it. It's a threat. It is essentially a competing currency, which we know is against the law. That's a tricky one. But as long as you possess them, right? This is, again, one of the reasons why you want to have a digital ledger, a nano ledger S or a Trezor, so you control the private keys and the public keys. If you have it at something like Coinbase, if you have it at something like Bitfinex or BitMEX or Binance, in theory, the government could shut those down and prevent you from accessing your assets if it's on an exchange. So where do you think I keep most of mine? They're in my possession. So let's say hypothetically, I've got on my little Nano Ledger S 9 Bitcoins, right? Okay, great. I can go, let's say they ban it in the US, so I have no way to pull that money out here. Well, I could just go travel to Korea or some other country, find an ATM out there, or basically go try to sell these things to somebody, and I would now have access to cash. There are many many that are used for transactions. Bitcoin is growing. Of course, if you just saw what PayPal did recently, that's interesting because now they can do bit payments there, which would now open the door to cryptocurrencies being used. So if I go to PayPal, PayPal right now links, in my personal case, up to my checking account. But I could have it linked to maybe a cryptocurrency account. And now all my transactions would be done from that cryptocurrency account. Of course, every time a transaction is made, they would have to sell some cryptocurrency. There's a spread involved there. And of course, there'll probably be some slippage. But it's still opening the doorway to us being able to use cryptocurrencies for transactions. So I think this will probably be one of the more hot topics in, let's say, 5 to 10 years. I think this is going to be a real headbutting between politics and the Fed and cryptocurrencies around the world. So I'm not as skeptical as many. I do think that there's a place for them. I think at some point we will all be living in a digital world. You will no longer have cash. It's all going to be just probably a chip. I hate to say it. I certainly as hell don't want one. No, Big Heb says 9 Bitcoins. I've been buying them for a while. My first Bitcoin, and it feels like I was late, was at $250. So, and I'm bummed I didn't buy more, right? I was like, oh, why did I only buy one? I should have bought like a dozen of them at that time, but I was early on. The Fed can manipulate Fedcoin just like they do now with their dollar, and that's Big Ed. That's exactly the point, right? So you could have $10,000 of Fed coins, but as they continue to increase the money supply, the value of my $10,000 goes down, right? It's going to dilute the value of what I have there. So it's just like a fiat dollar. The big difference here, if you look at what the Fed coin would be versus, let's say, opening up your wallet and having cash, is number one, they can take that digital dollar away from you instantly. They can turn it off instantly. Hit a button, your account is frozen, nothing you can do about it. With cash, you still have that black market potential. I could take a $100 bill, I could go somewhere and buy what I need to. They can't shut it off, which is why I always have cash in my wallet. The other side of this is ease of use. What's going to be easier to use? Physical currency with change or digital, where I'll literally probably have a Fed app on my phone. My guess is that's what it will be a Fed app. And I could just literally just tap, boom, just like Apple Pay, but now it comes directly out of a Fed account. So to me, that's where we're headed. I can make arguments pro and con for each one. Bottom line is a digital currency does not make it any better than a fiat currency. It's still a fiat currency if it's run by the Fed because they can increase that money supply at their whim. So, what time we got? All right. Let's see. Can you buy food with Bitcoin? Not well. I'm sure some places might offer it. I don't know of any stores right now that will actually let you, like grocery stores. But my bet is here in the near future. If you're ordering online, you can pay with Bitcoin. There are restaurants that will take it. The challenge is this: with Bitcoin, you have a 10-minute settlement. So the check comes, and I want to pay with Bitcoin. I now have to wait minimum of 10 minutes to get confirmation. That's why other cryptocurrencies like Dash do so well, because Dash has instant payment. Even though it takes a little bit longer to record in the blockchain, they'll guarantee the funds are there through it's the structure of how their cryptocurrency backend functions, their blockchain functions. So rather interesting there, the way that something like Dash will work. There are other cryptocurrencies that are much faster with regards to settlement. For example, Bitcoin's 10 minutes. Well, Litecoin is 2.5. So it's already speeding up that process. My guess is in the near future, we won't have the discussion. You and I will not even be talking about using Bitcoin to buy groceries or to buy food or to buy gas. It won't be used for that. It will be used for a store of value, digital gold. But your EOS, your Tron, your Ethereum 2.0, those might all be used as transactional mediums. And I think right now that's where the rush is. The rush is to get to a blockchain technology that's decentralized that will now allow you to make real quick, rapid transactions, and then we can pay for our groceries, our food, whatever you want, just by swiping a card or an app on your phone. And to me, that's where it's going. Richard says, sounds like Big Brother. 100%. I mean, look, I have friends who are skeptical about cryptocurrencies saying, well, they can see every transaction you're making. You think that Visa and MasterCard don't know everything that you've done? They don't know every single transaction you make? Of course they do. Your bank knows where, if you're using your debit card, they know a lot of information about you. So it's not like anything's really private, right? There is, thanks, Josh. Nothing's really private. It's all the property of that specific entity. So yeah, in this case, the Fed would know a ton about us. And, if you got something shady going on, that's probably going to be an issue, right? You're going to try to go to the black market and buy some black tar heroin using your Fed coin. Probably not a good idea. All right, let's see. Which one is the most popular transactional medium? I don't know, Joseph. Right now, we can use something like Blocktivity, right? And let me just bring this site up here for you. Blocktivity.info just shows you who's doing the most transactions, right? It's really talking about decentralized networks. And I've pointed this one out. I mean, EOS is, whoa. EOS has a record of 357 million transactions in a 24-hour period. This is new. And this is one of the reasons I have a lot of Tron. Tron did 1 billion transactions in a 24-hour period. Keep your eyes on Tron. I've been talking about this one. A lot of people at the beginning thought that Tron was an absolute scam. And I thought it was too. Basically copied someone's white paper and just copied someone's code and made their own thing. But the guy now has billions of dollars, right? So what he's doing is he's taking that money and he's buying up a lot of other companies. He's buying the programmers, buying the developers, and it looks like he's doing something pretty good. The ones that have the highest transaction, you can see them here. You have, I'm not going to talk about Bitcoin Satoshi Vision. You have Stellar Lumens, which is XLM. You have Tron, TLOS, which I don't know much about that one. And then you have EOS. I own EOS. I have Tron. I have Stellar Lumens. I have Bitcoin. And, basically you're looking for the ones that have a large transactional volume. Change 16%. Let's bring that one up because I have a ton. Yeah, that's really interesting. 7 days operations per hour. Boy, they really just had this huge spike here. But let's see if I haven't looked at the price of Tron. I hope it's up 16%. I know a lot of them have been up big. World Coin Index is the one I use for price tracking on these bad boys. Let's see, what did Tron do? No, Tron was only at 1.7. It's 2 cents. I mean, I think I bought a ton of it at like 8 cents. So I'm down on this one. But EOS doing okay today. Chainlink doing great, up 12.8%. But you notice the big dogs up here. This is really where you're generally going to want to keep your investments. I'm pretty happy. My average price on Ripple is 7 cents. So I'm still keeping it, even though I'm not very optimistic on Ripple going forward. I don't think they're going to do what they want to do. But anyway, we could do a lot more about on cryptocurrencies. I don't want to bore some people. I know some of you guys don't care about it. Let's see. Important intangibles. They're absolutely critical for a new economy. Caution, you trust may be a dead project, so enter at your own risk. Yeah, do your research. I mean, a lot of people still slam Tron thinking it's a scam. Careful with that one. I don't. Caveat emptor, buyer beware is the general talk track for these. So yeah, it says here it's only 2.8% for Litecoin today, but if you notice the last 7 days, it's only because it measures the last 24 hours. So their charts measure the last 24 hours. If you go back a couple of days, this thing was trading at $47. It hit a peak here of 57, so it rallies $10, about 25% in just a day and a half. So looking great on that front there for what are we looking at? Litecoin here. Anyway, I could spend a ton of time, guys, just breaking this stuff down and going through, but I'm actually pretty optimistic on it. I think that it's got a lot of place in our economy going forward. We'll probably, I think in 5 years it'll just be, we'll look back at this conversation and be like, what were we thinking? These things are now commonplace. The question is which one? If you look at this list here is, I'll go to World Coin Index's homepage. I mean, there's hundreds and hundreds and hundreds, there's thousands of them. There's some of these down here, like Cardano. That's a different technology, right? So I own some Cardano, which is ADA, not performing very well. There's a ton here. BitTorrent is now owned by Tron, right? Justin Sun bought this one, so he's buying all kinds of different companies. DeFi Money, Tezos, Waves. I mean, these are all different projects, different objectives. Basic Attention Token. I mean, you can't just go out there and say, I'll buy this one because it's cheap, right? You want to understand what's their project. What are they doing that may revolutionize some part of our world or some industry out there? I don't see EOS on here. I haven't seen EOS for quite some time. But there's literally thousands of them that you could choose from. It becomes a little overwhelming sometimes. All right. Let's see. Let me go to just the economic calendar and earnings calendar because I got to run. By the way, I have a webinar coming up here in just a little bit. For those of you who might not know, we are doing a webinar with Larry Jacobson. I will put that link here in just a second. Let me see if I can bring that one up because I know it's coming up here very, very shortly. Where is it? Oh, bear with me. Okay, sorry. So here's what we got cooking for tomorrow. Tomorrow's economic calendar. Today's brought us one number of interest for me, and that is the top number here that you see. Way better than expected by almost 100,000 on unemployment claims. That was certainly a positive for the market today. Earnings-wise, you had some really big misses. Intel just got slaughtered after hours. The one that really is soaring right now is Gilead because the FDA gave them approval for their COVID-19 drug. That's like Remdesivir. They all get some crazy ass. I don't know where. I want to be the guy that names drugs for drug companies. Seriously, I don't get how they can be such crazy names. Let me see. I'm trying to bring up the link for the webinar here in just a sec, but I'm trying to do too many things at once, and I just don't have that kind of skill. Okay, there we go. So here is the link to the webinar for today. Yes, this is an OTA webinar. All right, so it'll be Larry and I. It's going to be at 4 o'clock, so I got an hour, which is why I need to wrap this up so I can run back to the office, and we're going to be doing it from the studio out there. But there is your YouTube link for the webinar coming up here in just a minute. All right, for tomorrow. Here's what's cooking. American Express, you have Cleveland Cliffs, Barclays, and Eni, so nothing really that exciting there. Really, the fireworks hit next week, as next Thursday is one of those days that I will probably literally be sitting here with a bowl of popcorn crunching away on the show. Economic announcements for tomorrow. For the U.S., it's pretty light. We have some manufacturing numbers, but it's really manufacturing and services for everybody. France, Germany, EU, UK, and also United States. So there we go. The topic will not be Maui Wowie on the webinar. Actually, we might bring it up just a little bit, to be honest, but we have to keep things PG over there at the OTA webinar. So that's what's cooking for tomorrow. Not a ton. I will not be doing a show tomorrow, guys. I'm back to the East Coast. I'll be gone Friday and Monday. Tuesday, I have a guest on the show. We're going to have Lauren Newman on the program on Tuesday. I think I'll have Tilly on Wednesday, Sam Evans on Thursday, and then Friday, I'm going to be ready for a glass of whiskey. That's pretty much my plan there. I'll show you real quick since some of you are typing in the chat. Let's just bring up Intel just so you guys can see how crazy this one has been. Doesn't look like much, right? I'm going to put a line right across the lows for the past 3 months, right? That's right around 46, call it $47. I'll make this a 5-minute chart. And now let's go through it on 24 so you can see the earnings. Womp womp. There's Intel, got slaughtered, and it's almost back to those lows. Here you can see the $47 mark. It's at $48.86 right now, but check out Guild. There's Gilead with their earnings announced, not earnings, but their statement from the Fed. Yeah, Big Eb, I don't know that. He says Guild does not make much from their Remdesivir. I don't even know what that is, but that's their drug for COVID-19. You would think if they got approval for COVID-19 drug, that this thing would be at $100 plus right now, just skyrocketing. So yeah, that must be that there's not much margin there or something. But yeah, FDA approval. Yeah. Isn't it funny, Big Eb, how that's changed? God, you guys remember years ago, if you mentioned semiconductors or chip makers and you brought up AMD, people were like, oh gosh, why would you buy AMD? Ew, they're junk. Their chips aren't the best. They're not good. Look at the monthly chart of AMD. I mean, I remember back in 2015-16, this thing's just a couple bucks, and people were still bagging on it. Like, oh gosh, gross. Well, did I say FTC? I meant FDA. My apologies. It's FDA. Food and Drug Administration would be approving drugs, not the FTC. FTC is just masters of overstepping their political power boundaries. And here's Intel. Yep. Still performing well, but nowhere near what you're seeing with that AMD. AMD really just amazing performance-wise. That is just phenomenal. Okay. All right, guys, that's going to do it for me. I got to run. I got to go get ready for a webinar, so I'm going to take off and head back to the studio. Again, if you have comments, questions, feel free to put them down below the video on our YouTube page. If you like today's show, if you liked having Bill Addiss, give us a thumbs up. If you want to know more about his signature series, which I would encourage you to do, contact your local center. They'll know more about it. I'm not sure what the dates are. I just know Bill does an amazing job, and he's got so much amazing knowledge. It's funny. The guy actually was teaching for these major firms. He taught for Lehman Brothers and some other major financial firms, as well as actually, this is the part that gets me, he teaches classes for the Federal Reserve. I mean, if I want somebody to teach me how the Fed works, I want the guy who's working for the Federal Reserve. So it should be pretty good. All right, guys, that's going to do it for me. Again, if you have comments, questions, put them down below the video. You can always email me at tradermerlin@gmail.com or at tradermerlin.com. And, of course, hit that like button. I will see you guys on Tuesday. Take care. Well, I'll see you guys in an hour for the OTA webinar. Not, I'll see you on Tuesday. Take care.